Hello everyone, welcome to LearnStocks101.com. It's our free market video. It is Tuesday, August 5th, 2014. What I thought I'd start off with tonight is a picture, another way to show you why it is so tough to trade a market is pulling back, correcting. It gets a little bearish, I guess you could say, to make it easy. Because I've talked about this for a few days now, how the moves you get whipsawed around a little bit. It's a little tougher to go directionally because not only intraday moves bigger, but the daily moves get a little bit bigger. And they go in both directions. I mean, the moves when they're bigger just don't go in one direction. They go in both directions. So what I have up here is a year chart of the SPY with the indicator below the average true range. Well, the average true range measures volatility, measures the average true movement of the stock over, in this case, a period of 14 days. But what you're going to see from this graph is that when you get down moves in the SPY, the ATR increases. Then you get a grinding back higher, it flattens out to go lower. Then you get that move down, the average true range decrease or increases. So it's harder to trade when the market is moving more over a period of 14 days. In other words, more violently, more bigger moves. The biggest probably picture of how this works is that this move from April right here, where we really grinded higher for such a long time. Look at how all this volatility got sucked out. That was over $2 move on a given day, average, up here down to about $1.20 down here. And now we just get a little tick below the trend line, below that 21 EMA, and now all of a sudden we're back up here at about $1.70 on an average move. And this works for stocks as well. And I'll talk about something in a second. You see Google up here. This is a good depiction right here where it's heading down. Average true range blows up and we grind higher. Average true range gets squashed. This is also a good way, like I talked about the other day, to go ahead and manage your positions as well, because if you know the average true range or the average move of the stock over the last 14 days, then you might not get stopped out as much. You put your stops on based on the average true range instead of support and resistance levels. I mean, that's something for a completely different video, but if your stock is moving more violently in both directions, whatever you're trading, let's say, it's good to know the average true range of that move so you don't get stopped out too quickly on the whipsaws. And that's what I was talking about the other day when I was talking about changing your time frame. So looking at the market on a regular basis, it is important to know where it might be going, but I think it's more important to know that it's where it is. Because where it is, as long as it stays below this 21 EMA right here and starts banging around here, it's going to stay violent on the moves. I mean, we're not going to start grinding higher or get in a more comfort zone to be able to trade a little bit easier unless it gets back above the 21 EMA on the SPY. And if it gets below the 100 simple, the line that it's held many times, it's going to even get more violent on the moves. And you'll know, that's the key right there to know, because everybody asks me, like, how low can we go? Well, I don't know that yet because we got to break the 100 simple day moving average first off. And what I mean is that we've broken it a couple times, even over the last 6 months, but we've broken it, retested, and gone straight back above it right here as well. So your litmus test is we break it, test, and go lower. Then you'll know. Then we can get targets. I mean, obviously the first target, the real major support level for this in this situation would be closer. I mean, not that low. I'm looking at these support levels in this area right here at about 195, 185 on the SPY. There's no real major support until that level if it breaks down, because this is the other major support level that it would have to get through, and that's just a tick below that 100 simple moving average. That's about 189. So those are some levels to watch. But like I said, I think it's more important to know where it's at right now, because as long as it's at where it's at, we're going to have a situation where there's volatility and makes it difficult to trade stocks in general. The Qs are under, again, and the SPY could possibly make a move back up, and without getting bullish again, we could still go back up to this 21 EMA, which is about 195.60, could be 195.50 tomorrow. So again, it could still retest that level without turning around and getting back into the bullish frame of mind. The Qs, as we've pointed out, are testing the underside of this 21 EMA as we speak. So we got to watch that. The IWM, just like the SPY, Could go all the way back up to about 113 and a half, or even a little bit lower, because this moving average is moving down every day, and still not break this downtrend. So that's your level to watch there. I think the easiest trade to make right now is to be in bonds, because they're not very violent, and if this market gets really nasty, you'll make some money in bonds. TLT is what I like to trade. And if the market starts to grind higher, you can see that bonds can still go higher. If the market grinds higher, you're not going to get whipsawed around on that too much. So bottom line on these markets is that I just gave you a different picture of why it's so difficult to trade, why it's such a tough environment, and things to watch. And we're just going to be in a rough situation trading until we either hit a bottom or get back above that 21 EMA. So we're going to cover. I got two stocks. I always get stocks requested that just reported. So we're going to cover Disney and Zillow, and then Apple and Pandora, and then we'll end it there. So let me get these set up. All right, so I got my lines on them. So Disney just reported, and it was moving a little bit better earlier. I saw it above 87. So what I like about the Disney chart is it doesn't really care what the market's doing in general. I mean, even when we've had the up move or the down move, it's done its own little thing. If the market's not gonna go much lower, Disney is one of those stocks that aren't as violent. And with a decent earnings report, it's actually trading up about 13 cents, which isn't too fantastic. But I like this depending on where it opens tomorrow. With a base, it's 85.69. And you see that was the old breakout level right here. And also the base that it's put in recently. Because if this gets moving and holds 85.69, usually I get asked on targets, but this is an easy one on targets after an earnings report. 87.61 is your first target, then 89.19 and 91.20 would be the targets to look at if this gets going. It's a very low risk trade. You're only putting $1 at risk, and if it gets 89, you have about $2.50 on the upside. Zillow just reported and is really not doing anything. It's down about 85 cents right now. I drew this already. The key for Zillow right here is this ambush zone. What I call the ambush zone is a retracement level that would make a higher low. The 50 and 61.8, 50% 61.8 retracement of that move right here. If it holds that level, usually it's a higher low and it can move on and go and make a higher high. So what you're watching on Zillow tomorrow, in this situation that it's at, we have this zone that's between 139 and 16 cents and 144. So between 139 and 144. So if we start rolling below 139, I see a target in Zillow back to lows of 123.5. If we hold this level and start moving up higher, we got 164.90 and then 176 and then 190 as targets to the upside. Okay, that would be the Zillow targets off that earnings report. I got a question on Apple as well, and I still believe that the market is the only thing that can take Apple a lot lower. I mean, it's not doing great right now, but the only thing that can take Apple a lot lower and get it out of this trend that it's currently in. We have a good trend line here that it's holding up on pretty well. A little bit below the 21 EMA is the market rolling over. And I mean rolling over, maybe possibly below that 100-day simple moving average. Now, I mean, I could be wrong and it could go down on its own, but I would like to see another close back over that 21 to be bullish on it. And if it does start rolling down, your first support level to the downside is 92.57. So the trade here is for me, I want to wait till it gets another close above this 21 EMA. And then I'll look for support I don't want to short Apple in this with this kind of trend that is going on. And when I say I don't want to short Apple, I'm talking about to short Apple and hold it for a week or so. You can trade Apple short on the in an intraday basis, but I'll be looking for places to buy Apple. And the last one I got a question on was Pandora, because that's been acting a little funny since its earnings report. It's gapped down, but it's holding that base of the gap. So Pandora is an interesting setup right here, because if it breaks 24.50, which it held up pretty well today. So if this breaks 24.50, I got targets to the downside of 22.78 and 20.70. Now that also adds up with this. I like when the fibs match up with the support levels on the price action from previous price action. So your trade here is, I mean, I would call this what I would call to my members a radar stock because it's on my radar. I don't know if it's a trade setup yet. It could be because I think your upper side, if you were going to go, short Pandora, your stop would be at the gap high at 25.80. That would be your stop. So if it gets in that gap, it can fill the gap to 27.5. So if you were short Pandora, that would be your stop. If you were long Pandora, that'd be your stop at 24.50. See, the problem is it's not really doing anything right now, and I will tell you that I would lean more towards the bearish side of things because the minus DMI is controlling the RSI is trading below 50. But be careful here. Again, it's a tight stop. I would like it short, stop at 25.80, targets 22.70 and 20.70. So that's all I got for tonight. Keep the questions coming from the contact form. Remember all the free stuff that we have on the site. That'll pop up in a second. The menu side over here, because I talk about this stuff every night. How to use fibs to trade. ADX is a main indicator on my charts. RSI is a main indicator. These are all free videos that you guys can go and check out. That talks a lot about how I view these indicators that you see every night on my charts. So you guys have a nice night, and we'll see you tomorrow.